Did you know that the collapse of FTX has forced some firms to cease operations and even lose some customers and staff? The cryptocurrency world is yet to recover from FTX's demise. Some businesses took the brunt of the blow and were directly impacted by the storm that the troubled crypto exchange delivered. In this video, we will go over some businesses that were affected by the fall of FTX. Hello, and welcome back to Crypto Channel. Although the FTX cryptocurrency exchange failed in less than 2 weeks, causing the company to file for Chapter 11 bankruptcy on November 11th, the legal repercussions of these events will probably take much longer to manifest. A lot of crypto enterprises and businesses outside the sector, in addition to over 1 million individual investors, had exposure to FTX. As new details are discovered, the list is probably going to get longer. Given that FTX has sought Chapter 11 bankruptcy protection, it is uncertain if these companies will be able to recoup their FTX-related funds. Pressure on Bitcoin miners is increased by depressed markets, a higher computing demand, and an increase in network difficulty. The FTX Contagion continues to spread through the crypto market and shows no immediate signs of abating. Let's take a look at some companies that were hit by the FTX Contagion. Before we continue, be sure to watch the other videos on our channel, like and comment on this one, and subscribe to never miss a video. Number 1. Genesis Trading. According to reports, major cryptocurrency broker firm Genesis is having trouble raising $1 billion and may be declaring bankruptcy. Durar Islam, the interim CEO of cryptocurrency investment bank Genesis Global Trading, told customers on November 16th that the FTX collapse had caused the lending section to halt redemptions and new loan originations because it had $175 million tied up in an FTX trading account. It then asked Binance and Apollo for assistance to obtain at least $1 billion in new funding. In light of potential conflict of interest, Binance reportedly turned down a proposal to participate in the failing crypto lending company Genesis. The world's largest cryptocurrency exchange's loan book appears to have received a proposal from Genesis, but it is unclear whether the exchange would accept it. Number 2. Galaxy Digital. Blockchain financial service provider Galaxy Digital has reported its exposure to FTX of $76.6 million. The company stated that $47.5 million of the total sum is now being withdrawn. The business emphasized that it still had $1.5 billion in liquid assets despite the vulnerability. This consists of $1 billion in cash and $235.8 million in stablecoins that may be used to offset losses. Although at the time of this video was being made, it was not apparent where they stood. Number 3. Sequoia Capital. The catastrophic collapse of the cryptocurrency exchange FTX over the past few weeks has decimated the $213.5 million that Sequoia-related companies invested in the company and damaged the reputation of one of the most prestigious venture capital firms in Silicon Valley. Sequoia Capital informed its limited partners in the letter that the $213.5 million it invested in the firm FTX and FTX US had now lost all its value. The company acknowledged that the FTX fiasco created a solvency risk. The venture capital business argued that despite this, its exposure is small and balanced out by its profits. The company stated in a letter that reads, "The $150 million loss is offset by $7.5 billion in realized and unrealized gains in the same fund, so the fund remains in good shape." The company has stated that it is in the business of taking risks, implying that certain investments will have benefits while others may have drawbacks. Number 4. GALOIS Capital. Hedge fund GALOIS Capital has acknowledged that some of its funds are stranded on FTX. According to a letter to investors that the Financial Times were able to get, the company still has half of its funds stranded on FTX. Based on the firm's assets under management as of June, the sum is projected to be close to $1 million. Number 5. BlockFi. A cryptocurrency lending company, BlockFi, acknowledged having substantial exposure to FTX and linked business entities when the FTX crisis rocked the market. The company, however, disputed allegations that the majority of its assets were traded on the FTX platform. The company wrote in a post update, "While we will continue to work on recovering all obligations owed by BlockFi, we expect that the recovery of the obligations owed to us by FTX will be delayed as FTX works through the bankruptcy process." The business restricted platform activity on November 11, 2022, and stopped client withdrawals. Additionally, the company gave clients the advice not to fund their interest accounts or BlockFi wallets. Number 6. Crypto.com. The CEO of exchange Crypto.com, Chris Marszalek, recently assured his clients that the exchange has fully recovered the $1 billion in assets it had transferred to FTX. The CEO emphasized that the company's risk is only a little over $10 million. Additionally, Marszalek assured users that the exchange would not stop allowing withdrawals and refuted claims that it had used its native cryptocurrency as security for loans. Number 7. Wintermute. Wintermute, a cryptocurrency market maker that made news after losing $160 million in a breach, acknowledged that it still had some money on the FTX exchange. As it tweeted, "We do have remaining funds on FTX, and while this is not ideal, the amount is within our risk tolerances and does not have a significant impact on our overall financial position." The firm informed its followers that the sum is within its risk tolerance and would not have a significant impact on its financial situation, although it did not reveal the exact amount it had on FTX. Number 8. Multicoin Capital. According to reports, the venture capital firm Multicoin Capital has $863 million in assets blocked on FTX. The company said in a letter obtained by The Block that 10% of the assets under the control in its fund master are frozen on the exchange. Number 9. CoinShares. In a statement dated 10 November 2022, CoinShares, a European digital asset trading firm, also announced its minimal exposure to the FTX market. The company stated in its statement that it had recently been successful in bringing its total exposure down to $31.5 million. Considering CoinShares' net asset value after the third quarter, which was over $282 million, this risk is rather little. The community was reassured by CoinShares that the company's financial situation is stable. Number 10. Celsius Network. There are $12 million in unpaid loans to Alameda from Celsius Network, a different Bitcoin lender that recently filed for bankruptcy. Insolvency proceedings are also being held in Alameda. The cryptocurrency lender Celsius reported $3.6 billion in liability to the FTX group as of January 2020, a considerable decrease from the $7.2 billion it held 3 years prior. Number 11. Pantera Capital. Investment company Pantera Capital highlighted that it has experienced certain risks and losses as a result of the FTX crash in a blog post. This resulted from the business purchasing Blockfolio for FTX token, FTT. The corporation liquidated as much FTT as it could on November 8th, according to the notice. Before November 8th, Pantera Capital held less than 3% of its entire $4.5 billion AUM in FTT tokens. The fund said that on that day, it liquidated the majority of its FTT position. At this time, it's unclear how much exposure the company has to FTX. Other than the businesses listed above, organizations like Nestcoin let go of several employees because it was unable to remove their assets from FTX. Decentralized financial services provider Liquid Meta said that it too possessed about $7.5 million in FTX. In addition, Voyager Digital, which is going to be bought by FTX, said that the bidding process will be reopened. According to FTX's bankruptcy petition, the business has more than 1 million creditors. The defunct cryptocurrency exchange FTX exposed a significant number of businesses focused on cryptocurrencies in one way or another, whether it was through ownership of the exchange's FTT token, assets kept on the FTX platform, loans to a related business, or other means. The likelihood that these enterprises will be able to recover these cash is in doubt because FTX is embroiled in bankruptcy procedures and its future is unclear. Watch our video on the fall of FTX to know why and how FTX went into extinction. Thanks for watching. If you have any thoughts on this video, drop them in the comments section. Also, if you want to learn more about cryptocurrencies and stay up to date on the latest news in the crypto space, turn on the notifications button so you'll be notified whenever we upload new videos like this.